Prime Minister Yingluck Shinawatra today kicked off a 5-day tour of 6 provinces in the north and central region to lay down the groundwork for flood prevention projects ahead of this year's rainy season. After sharing the weekly cabinet meeting, Yingluck will leave for the lower northern province of Uttaradit, where she will visit the Sirikit Dam as well as other places which will be used for water retention areas. The government is preparing to issue 350 billion baht bonds to finance flood and related projects in a bid to avoid the repeat of last year's massive floods, which submerged households and factories in many provinces downstream. To cope with an expected large amount of rainfalls later this year, the government is preparing to ready all major dams and dikes, as well as large water retention areas in Uttaradit and other downstream provinces, including Phitsanulok, Ayutthaya, Pathum Thani, and Bangkok, where the water can flow into the sea. Government house sources said there will also be workshops in these provinces to create an understanding with local officials and residents, especially farmers, whose farmland will be used as water retention areas. The government will have to pay compensation to landowners to use their property, as well as cover the loss of rice growing and other farming opportunities during the rainy season. Overall, the government needs a total of 2 million rai of water retention areas for a period of several months as part of its water resource management plan to avoid the repeat of last year's massive floods. Tomorrow, Yingluck will travel to inspect the Bung Raman Monkey Cheek project and the water distribution canal in Phitsanulok. The next stop is to see the water embankment in Nakhon Sawan province, as well as examine the Bang Chom Si water gate, which is a crucial spot before water could enter the northern Bangkok in Chayanat province. Later this week, Yingluck will be in Lopburi province to inspect the Natural Disaster Prevention Plan, where officials will be demonstrating a drill in case of emergency from the Pa Sakko Cholasit Dam. She will then travel down to Ayutthaya province, which was battered by the devastated flood last year, in order to examine the repairing of the water gates and prepare areas to support water inflow. On February 17, Prime Minister Yingluck will hold an announcement regarding her inspection on the work to resolve the flood problem in upstream, middle-stream, and downstream provinces. She will then travel to Chulalongkorn Water Gate in Rangsit area to install water pumps before returning to Bangkok. Meanwhile, the leader of opposition Democrat Party, Abhisit Wechashiwa, said the government's preparation work will be closely watched to see if it will be ready to cope with the expected large amount of water. He also urged the government to quickly pay out compensation money to last year's flood victims, follow up on fixing damaged canals and water gate from last year's floods, and improve the accuracy of weather forecasts and monitoring system. The government also has to clearly earmark the 2 million rai of land, which will be used for water retention areas.
Thai government has approved compensation worth a total up to 7.5 million baht for each of the victims affected by the southern insurgency over the past several years. Deputy Prime Minister and Interim Minister Yonghyut Vichaydit has announced the Relief Committee's approval to pay over 7.5 million baht to each victim. The compensation package will be divided into 4 categories for 4 types of victims, including victims from Kruse incident, victims from Tak Bai incident, victims who were affected by state authorities, and victims from general incident. The compensation package will be urgently proposed to the cabinet. It is expected that the relief package could be implemented within 1 to 2 months. Under the same relief framework, another committee will also be set up to help state authorities killed by the southern insurgency.
We will move on to Greece as Greek lawmakers on Monday approved harsh new austerity measures demanded by bailout creditors to save the debt-crippled country from bankruptcy after riots in Athens and other cities left stores looted and burned and more than 120 people hurt. The historic vote paves the way for Greece's European partners and the International Monetary Fund to release 130 billion euros or 170 billion US dollars in new rescue loans, without which Greece would default on its mountain of debt next month and likely leave the Eurozone. Lawmakers voted 199 to 74 in favor of the cutbacks, despite strong dissent among the two main coalition members. Violence was also reported in 6 other cities, the worst in central Volos, where the town hall and a tax office were damaged by fire, police said. Sunday's clashes erupted after more than 100,000 protesters marched to the parliament to rally against the drastic cuts, which will axe 1 in 5 civil service jobs and slash the minimum wage by more than a fifth. At least 45 businesses were damaged by fire, including several historic buildings, movie theaters, banks, and a cafeteria in the worst riot damage in Athens in years. 50 police officers were injured and at least 70 protesters were hospitalized. 67 suspected rioters were arrested and further 70 detained. Since May 2010, Greece has survived on 110 billion euro or 145 billion US dollar bailout from its European partners and the International Monetary Fund. When that proved insufficient, the new rescue package was approved. The deal, which has not yet been finalized, will be combined with a massive bond swap deal to write off half of the country's privately held debt. But for both deals to materialize, Greece had to persuade its deeply skeptical creditors that it has the will to implement spending cuts and public sector reforms that will end years of fiscal profligacy and tame gaping budget deficits. As protests raged Sunday, demonstrators set bonfires in front of the parliament, and dozens of riot police formed lines to keep them from making a run on the building.
Oil advanced from a 3-day low after Greece's parliament approved austerity measures to secure an international bailout, easing concern that Europe's debt crisis will worsen and curb commodity demand. Futures rose as much as 0.9% in New York as 199 lawmakers supported the bill and 74 were against it. The measures will allow the country to secure the 172 billion US dollar second aid package. Sanctions on Iran tightened after companies controlling more than 100 supertankers said they would stop loading cargoes from the nation. It's a confidence builder in terms of Greece's willingness to implement reform, according to a chief market analyst at CMC Markets in Sydney. The market has made the adjustment it needed to make from being excessively pessimistic a few months ago and has now based itself on an assumption of moderate international growth. Oil from March delivery climbed as much as 86 cents to 99.53 US dollars a barrel on the New York Mercantile Exchange. It was $99.41 at 12:55 p.m. Sydney time. Brent oil from March settlement increased 85 cents or 0.7 to 118.16 US dollars a barrel on the ICE Futures Europe Exchange. The European benchmark contracts premium to New York traded West Texas Intermediate or WTI was as 18.73 US dollars compared with $18.64 on February the 10th. Passage of the austerity bill in Greece puts the spotlight on a meeting of Euro region finance minister on February the 15th that must decide whether to approve the second aid package. Resolution of the negotiations, which started in July, would help contain the threat that speculators will target debt-saddled nations, including Italy and Portugal. European Union countries accounted for about 16% of the world's oil demand, according to BP's statistical review of world energy. Oil also rose on speculation shipments from Iran, the Organization of Petroleum Exporting Countries' second biggest crude producer, will be disrupted.
And this week, the Thai stock market is expected to continue gaining support from fund inflows based on ASP Research's data collection. Foreign investors were net buyers of Thai stocks totaling 33.9 billion baht from November 29, 2011 to February the 9th. The amount excluded a major foreign shareholders' 8.1 billion baht stock sales in InTouch to domestic institutional investors in January 2012 and a 7.9 billion baht sales of advanced stocks to foreign investors in December 2011. The inflow of foreign capital was the result of easing monetary policy and fund injections into the financial systems of developed countries. The U.S. announced it would maintain low interest rates in the next 2 years, while the Eurozone countries injected money into the financial system and lowered interest rates in an attempt to stem sovereign debt problems in several countries. The result is high liquidity, some of which has flowed into risky assets, including commodities and stock markets, boosting their prices. This development is likely to continue in the Thai stock market for a certain period. Based on foreign investors' trading information since 1998, foreign investors' net buying position was about 63 billion baht per round. This indicates there is a high chance that foreign investors will continue their net buying, boosting the possibility that the SET index will trade above a price-to-earning ratio or PE of 13 times. At this PE level, the SET index is expected to reach 1,121 points in the first quarter and 1,144 points in the second quarter. ASP Research suggests more weighting for commodity-related stocks and industrial states. Among commodity-related stocks, PTTGC is the most outstanding in the petrochemical group. Among energy stocks, PTT is the most outstanding with its share price far below its fundamentals.
Thailand's finance ministry will start issuing government bonds to refinance the debt of the Financial Institution Development Fund, or FIDF, worth 300 billion baht due this year due to lower interest rates, as the cost of refinancing is much lower than the cost of existing bonds. Director General of the Public Debt Management Office, Chakrit Pharapanthakul, said the ministry is preparing to issue government bonds to refinance 206 billion baht of the FIDF debt due in September this year. The central bank currently has not yet found a source for funds to repay the FIDF debt. Since the debt amount is large, the ministry will issue bonds in a phased manner to lessen its impact on the yield curve of government bonds. Each tranche would be not more than 50 billion baht. He said the previous bonds worth 206 billion baht carried a high cost at about 6% per annum. The current market rate is about 3%, so the refinancing should lower the interest cost. Debt of about 30 billion baht to 40 billion baht would be due in March, and the ministry could borrow from the market right away to repay it, according to Chakrit. The government has earmarked a budget of 68 billion baht this year to pay the interest cost of the 1.14 trillion baht FIDF debt, but actual interest cost should be about 62 billion baht due to the low interest rate trend in the market. The central bank has not yet decided how much more in premiums it could raise from commercial banks to repay the FIDF debt incurred since the 1997 Asian financial crisis. The government recently issued an emergency decree ordering the central bank to pay this debt.